All right, here where we left off. So we just finished attempting to close out our books as of right now. So we started off by doing our financial statements. So here we completed the adjusted trial balance, which I've already indicated with you guys. That I also made sums of the main accounts just to be able to fill out the financial statements a lot easier. So here, I already have those in blue, and what I did is I actually cell referenced them. So I just compared and took the numbers off directly from this adjusted trial balance. And so I came up with the income statement. So again, what I did was I took my total sales, subtracted my sales returns and allowances, as well as subtracted out my sales discount. And now I have a grand total of 22,000. Now what that's going to do is that's just my total sales. I have to subtract my cost of goods sold and my cost of materials to get myself the gross profit. So by doing so, I subtracted my total cost of goods sold, which is $3,241, and I subtracted my total cost of material, which was $997, to get me a grand total of gross profit of $18,706. Now what I'm going to do is I'm going to subtract every single operating expense that occurred throughout the month of June. And here I went ahead and listed out all the expenses that occurred that month. And I got a grand total of $10,000 in expenses. So what I'm going to do is I'm going to take my 18,000. I'm going to subtract that 10,000. And then I'm going to also include my delivery income of $240 that I've earned, which other income is you receiving some kind of income that is separate from your actual main core business. So, and when by adding that up together, I got a grand total of $8,000, $8,630 as my net profit. Okay, so when I do is I take that net profit from here and I go ahead and transfer it right into the statement of equity. Okay, so in this case, in order to do the statement of equity, we're going to start off with how much the company was valued at in the beginning of the month. Since we started our business in the month of June, we originally started off with a $30,000 that's the value that we began our company with. Then we added our profit, or we either add our profit or subtract our loss. And in this case, we solved for the net income in the income statement, which we saw that we had an $8,000 profit. Then we're going to have to subtract anything that we've taken out from the company, such as owner's withdrawal, which we did. We took out $3,000. So that's going to go against the profit that we took out, just so then the company doesn't actually lose money itself. So by doing that, I have a grand total of $5,630, which I add that to my $30,000, and I get a grand total of $35,000, which in this case, we want to make note and make sure that we keep tabs on this exact number, because this number is going to play a huge role when we close out our entire book. Since we're closing out all of our accounts after this, when we start our closing process, we're going to close out all of the accounts, and that number must equal, at the end of the day, that's what our new value of our equity should equal up to. And if it doesn't, then we either one, we forgot to close out a specific account, or two, we did a wrong calculations and it didn't match. So again, and then we're also going to take this number to complete our third financial statement, which is going to be our trial balance, which I did go ahead. I'm sorry, our balance sheet. Okay, so what this entails is it does the fundamental. This ensures the accounting equation is true by measuring if our total assets equal our liabilities plus our equity. So here I listed out all the assets that we have for the company at its total value as if it stands right now, including including all the adjustments that were made. Okay, so if you got here I have a grand total of $72,000 worth of assets, and then I totaled up all my liabilities, and I also added the brand new equity that we just solved for, which right here it proves to us that yes, the total assets does in fact equal our total liabilities plus our equity. And here it is right here, $72,380.78. So our whole entire financial statements is correct. Now I will talk about the cash flows after this. It's not super important right now, but I do want to go ahead and proceed with the rest of the closing process. So once you've completed your financial statements, the next step is to close out all of your temporary accounts, which include all of your revenues and all of your expenses. So here, I already went ahead and got started with the first one. So understanding how to zero out, so we're going to go back to our general journal. So understanding how to close out or how to zero out an account is pretty straightforward. So again, if we remember what we learned in chapter 13, in order to close out all of the accounts, you're going to take the total amount of the balance, and you're going to journalize it in the opposite direction in order to zero out an account. So for example, all sales, they normally have a credit balance. So what I'm going to do is, in order to zero out those accounts, is I'm going to debit the accounts for the same exact amount. And as you can see in my ledger, so what I've been doing is I've been zeroing out every single account as I go. So in this case, for my sales, here for my sales for regular coffee, I went ahead and entered this into the ledger, and so I have a credit balance right now of $1,112.02. I typed that in as a debit, and I've recorded it and posted it to my ledger as a debit. And what happens is, with my running balance, it automatically calculated it and it turned it to zero. So I started recording every single entry and started zeroing them out one at a time. Now, as I reached to the bottom of my revenues, I noticed that I actually have a few contra accounts in here. So they have debit balances. So in order to fix that, what I did was I credited those accounts, which also zeroed them out as well. So for the sake of for this example, I've already cleared out every single account under my revenues. So everything, except for this one. What is this one? This one is delivery income. So delivery income, here I have debited it for $240. So I'm going to go ahead and enter that adjustment in here. So 630. And I'm going to make sure I write close just so that I can verify that. And it was on general journal number 21. And I am debiting $240, which, boom, it automatically calculates it. And now it is 0. Okay, we didn't have any interest income, so we don't need to record that. But so far, so good. Every revenue account has been zeroed out as of right now. And the last thing I got to do is I got to update my income summary, which I went ahead and did under my equity accounts. I went ahead and validated that, yes, I've already made the entry that I'm closing out my revenues. And by closing out my revenues, I currently have a credit balance of $23,185. Okay, so that is where I currently left off on. So now I'm gonna go ahead and continue journalizing, and now this time I'm gonna be closing out all of my expenses. Okay, so what I've recognized is as I started journalizing on them, I realized that this is definitely not enough space. So I went ahead and scratched out this large portion out here, and I decided to start on a new page. So general journal number 22, I believe. Yes. All right. So in a sense, normally expenses have a debit balance. So what I did is, since I want to zero out the account and transfer them all into income summary. So what I did is I'm going to credit all of my expense accounts, and it's going to include all of these. Okay, so we're going to go ahead and identify each and every one of them and start zeroing them out one at a time via using a credit. So we're going to go to our ledger, to the cost of goods sold section, and we're going to start from the top. So cost of goods sold. Here, my first one is cost of goods sold for regular coffee. Okay, so I'm going to go ahead and enter in my closing general journal number 22. And now we see that we need to credit the account for $1,097.51. $1,097.51. And there it goes. It's zero out now. So here in my credit, it is for, let me see the next one. For my regular coffee, it is $0.9751. Okay. And we're just going to double check to make sure that is correct. Yes. Next one we're going to zero out is Supreme Coffee. So cost of goods sold, Supreme Coffee. So 630. Close. General journal 22. And we're going to credit for 1160.01. 1160.01. Zero out. All right, so now I can transfer that over for 1160.01. Okay. Next account that we're going to be doing is cost of goods sold ceramic coffee mugs. So again, this was an adjustment entry. So I'm going to go ahead and close this out as well because we are closing everything in our ledger for expenses. So anything, even if it's an adjustment, I'm going to cross it out right now. So right now there's a total of $983.50, which by me crediting this, and the formula for this is going to be the previous entry plus any debits minus any credits, and boom, I get 0. So here it is going to be for $983.50. Oopsies, $983.50. All right, Yes, I could probably self-reference this, but then again, sometimes Excel doesn't work if you having way too many workbooks open. So um, I would actually prefer to just type it in rather than self-reference. But if you have multiple workbooks with multiple sheets in it, that's highly more recommendable than using multiple workbooks and referencing workbooks from there. All right, so here we closed out that one. Now the next thing is we're going to do is close out our cost of material. So cost of material, I guess I never, okay, well, we don't have small coffee cups, so that was my mistake. So here we going to close out this adjustment as well. So general journal 22. And this time we're going to credit to 7062. And with this formula, okay, it should appear as 0. Good. So now we can go ahead and come here for 270.62. Next we're going to do is our large cups. And this time it's for 324.80. Okay. And now it's 0. So 324.80 is for our large coffee cups. Next thing that we're going to zero out is going to be our cost of goods sold for sugar. And it is for $43.20. So there you go. We're going to zero that account for $43.20. All right. Lastly is our cost of material for creamer. So 30 here. We're going to close this out to the general journal. And this time we're going to credit it for $359.26. And it's going to be 0. So again, that was for $329.56. Oh, no, 26. $359.26. Okay. Now that was all of my cost of goods sold and my cost of materials. Now, as of what I know for sure, that those are just only that section for my cost, for my expenses. I still have to do my operating expenses over here. So from here, I'm going to start from all the way up from the very beginning. So here I have advertising expense for a grand total of $185. And again, most of my accounts are originally debited. So I'm going to go ahead and credit this account. So I'm going to credit for 185, and if I were to drag this, it should report as 0. Good. So 185. And here, I'm going to make sure I'm on the correct line. So my first one is advertising expense, and I credit it for 185. Okay. Next one is going to be bank fees. So here's my closing journal entry for a grand total of $479.09. All right, this one does not have a formula, so it's going to be this. And now it is 0. Okay, so I'm going to also credit my bank fees as $479.09. Okay. Next is going to be business expense. So here we have another adjustment right here. And this time we're going to be crediting for the total amount of General Journal 22. And we're going to be crediting for the amount. I see where it did not go over. So General Journal 22. All right, so I need to credit for $1,282.78. And if I pull this formula down, it should zero out. Good. So $1282.78. So I'm going to recognize that here in my business expense for $1282. No, shoot. Yeah, $1282.78. Okay. Now we're going to go ahead for freight expense. We've already zeroed it out, so there's nothing to record here. So I'm going to go ahead and double confirm that right here, that this is zeroed out properly. There you go, 0. Good. Next is going to be insurance expense for $195. So let me go ahead and do $630 for my closing process. So $195.83 should be my total. And there you go. I get my 0 right there. So $195 for insurance expense. Good. So $195.83. All right, next is going to be labor expense. Now, labor expense is broken up into 2 categories, which I've already listed out for you. So we are going to go in each and every single individual account and clear it out that way. All right. So we're going to clear this out for 1890. And of course, this should be 0 equal. Okay, 0 is the final number here, so I am crediting it for 1890. And then for my temporary labor expense, I'm also going to do the same thing here. I'm going to credit it for $252. All right. Okay, I get another 0. So for $252. All right, next I'm going to have is license and permit expense. So let me see, my temporary labor, this is license and permit expense, okay, for $375. And here we're going to go ahead and credit it for $375. And that should equal 0. Okay, so 375, 375. Okay. Next is loss on disposal of assets. So here, loss on disposal of asset, it should be for $2,000. All right, and here I'm going to close that out. For $2,000. Zero. Perfect. Now we're going to go ahead and go to office supplies expense. Office supplies expense is next. And that is for $70. So here we're going to also credit $70. And here we notice it is also another adjustment. All right, $0 is there. Okay, so we're almost done right here. Payroll expense. Again, payroll expense is actually broken down into smaller individual ones, which we've already listed here. So we're going to ensure that we continue the way it is. So the last thing we do is enter 70. So the first thing we're going to see is salaries and wages expense. So here I'm going to close it out. And we're going to close it out by crediting a total of $748 even. Okay. And then we should be able to pull down the formula here. And it is 0. So 748 even. All right. Next is going to be commissions expense. Commission expense. So here, going to do commissions expense for a total of $336.76. And we should be able to pull this formula down. And, oh, whoa. Okay, let's go ahead and repeat this formula. So up 1 plus this value minus this value, and now it's 0. So 3676. 33676. Okay, and then we have payroll tax expense. And we're going to credit it for $97.98. Which gives us 0. 97.98. All right, let's go ahead and double check what is next. Next is going to be rent expense. Because, okay, so purchase expenses we've already zeroed out by doing the adjustment entry that we have created when we converted our periodic inventory. Here we also got rid of purchase returns and allowances. Yep, it equals 0. Okay, good. There we go, 0. And then lastly, our purchase discounts, which unfortunately we were unable to receive. So nothing was entered in here. And then lastly, rent expense right here is for $1,500. So we're going to go ahead and close that out for $1,500. 0. Okay, so we're going to zero that out for $1,500. And then lastly, we have rent expense. Oh no, I forgot to add bad debt in here. Okay, so, alright. For the sake of this class, I'm just going to go ahead and fix this information right here. So bad debt is the next one. And bad debt expense, we have no travels expense, no utilities expense, bad debt expense right here. All right, so again, that's also another adjustment entry that we have calculated. And now that it's a debit balance, we're going to credit it for $256.04. So 256.04. 256.04. All right, last two ones that we have left is depreciation expense, which yesterday we spent the whole day doing. So here's 30, close. And it's for 335, 635, 56. All right, there you go. 0, 635, 56. 635, 635, 56. Okay, last but not least is $11.67 for amortizing expense, which I will go ahead and close that out. $11.67. There you go, 0. So now all of my expense accounts have been zeroed out. So now I need to update my income summary again in my equity account. Okay, so if I'm going to go ahead and total all this up here by doing my equal sum. Okay, equal sum. So I'm going to hold that and hold shift all the way down, because I just need all the way up to here. And I'm going to get a grand total of $14,000 dollars. So here I'm going to go ahead and go over here, and I'm going to go ahead and enter in my data here, and I'm going to write close out expenses. All right. Oh, 22. And it's for 55, 461. Okay. And if I were to do by equation, all right, I actually get a credit balance. Actually, yes. So I actually get a credit balance of 8630.48. That number looks familiar. So let's go ahead. 8630.48. So where have I seen that before? I have seen that when I calculated my profit. So let's go back to here and just confirm that my income statement is, yes, 8630.48 is my profit. And that's exactly what I just calculated right there. Okay, so what's going to happen next is, now that I finally got my my correct number here by closing out all my revenues and closing out all my expenses, now my income summary has a credit balance of 8630.48. Now, in order to do that, in order to move all my that profit into equity, I'm going to have to close out my income summary, which I know has a credit balance, so therefore I need to debit the account to zero it out. And by doing that, I'm going to increase my owner's equity by that $8,000. So it was 6 30 48. So 8 6 30 48 on both sides. And so I'm going to go ahead and journalize that real quick. So here's my journal entry. And now I'm going to go ahead and post it to my ledger. So 6:30, I'm going to close out to equity. All right. Journal number 22. I'm going to debit the account for 8 6 30 48, which should give me a running balance of 0. Okay. So here, if I pull this down, 0 is my answer. And now I can go ahead and bring this up to equity. And I'm going to post this into my equity account. So I'm going to increase my equity account income summary, general journal 22. And since I'm crediting this account for 8 6 30 48. All right. So I'm going to go ahead and get my calculation. So now I have $38,630.48, right? And yes, that is me adding the profit back in there. Now there's one more step that we need to include as well, is we need to make sure that we close every equity account into equity. So there is one more outstanding account, and that is going to be the owner's withdrawal. We need to close out the owner's withdrawal, in which this case here we took out money. So here we're going to close it out. Okay, general journal 22. And because it was a debit balance, we're going to credit this account by $3,000 to give us a running balance of 0 since we're closing it out. Okay, so here, 0. All right. And by me closing out or crediting the $3,000, we're closing it out to equity. So we want to make sure that we go ahead and ensure and validate this information. So here we're going to go back up here and we're going to enter that in there. Close withdraw. And general journal number 22. And here we are debiting, so we're going to bring down the value by $3,000. And that should give us a grand total in this equity account, a grand total of $35,630.48, which if we go to our equity statement or statement of equity, we're going to see that ding, 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 we got it to match 100%. So therefore, we completed our income statement, we completed our equity statement, as well as our balance sheet are all intact and 100% accurate. All right, and then lastly but not least, now that we did our closing books, I'm gonna go ahead and I've already did this ahead of time. I put a black band here just to indicate that this is done. We're done. We closed our books, and And we're completely done with this journal. So I'm going to go ahead and save that. And my ledger is 100% done as well. There's only one more step I have to do, which is, again, to do a post-closing trial balance, which in this case is pretty simple to do. Since we know that the only accounts that we actually closed out was indeed our revenues and our what is it? Just our revenues and our expenses. What I do know that has stayed is going to be my temporary accounts. So I do for surely know that my bank is going to be there. All of these, since what I did here for my balance sheet is I did separate them based on assets and liabilities, but none of these have been changed. None of these have been tampered with. So what I could do is when I make it to my post closing trial balance, I can go ahead and place that information down. So I have my bank account right here. I have all the information here, and what I can do is I can go back to my balance sheet and copy in out my my liabilities and be able to put it in my post-closing trial balance, because at least I know that those are the same. Oh, and I see that, oh, it didn't grab everything, so I would have to go ahead and reference those. So let me go back to my balance sheet. All right. Oh, nope, it will not grab it. So I'm just gonna have to, I'm just gonna go ahead and have to transfer it one value at a time. Okay, so there you go. I got rid of that. So let me see my post-closing trial balance. The total number I have in my accounts payable is $3,696.21. My total Visa payable is $1615.26. My total payroll liabilities is going to be for $580.34, and my total sales tax payable is $1636.59, and then lastly my loans was for $29,221.90. And then lastly I could go ahead and place my equity account in here. So owner's equity, and I know from just doing my thing, I know that it's 35,630.48, and then I can go ahead and calculate my totals here. So equals sum. Okay, enter that. So here I have my 72,000, and if I pull that that equation in, and I'm gonna here they both match 100%. I know that because I did my my balance sheet before that, but also since we verified and we successfully completed our equity, we verified that we did it correctly doing the income statement. We verified it again when completing the statement of equity. And we also verified it when we closed out our accounts and successfully reached that exact number. So yay! So this is how you complete the rest of Coffee Cafe and close it out to its complete uh, its completeness. Okay, so again, we'll talk about the cash flows on Thursday. So other than that, that is how you complete the books and financial statements and close out properly. All right.